Hey guys, Gil Stokes here. Welcome back to the Weekend Trading Edge. Getting ready to whip you around the markets and show you some of the best opportunities that are on my radar for the week ahead. If you are a frequent viewer, thank you for the support. Continue to do so. Hit that like button, subscribe if you're not already, and feel free to leave me a comment telling me that I'm awesome. Love reading stuff like that. And if you're new and you enjoy the video, hopefully we see you each week. If you do have any questions about what I talk about or things that you want covered, feel free to leave it in the comment section below. I do read through each and every one, and I will do my best to answer them, whether it's on a video or whether it's on a podcast episode. Today, we're going to start off a little bit differently. Instead of diving right into the charts, we're going to take a little bit of a look at the economic calendar because, well, if you were anywhere near the markets last week, we had some pretty impactful economic events, mainly PPI and CPI for the dollar. This week is going to be not as explosive, but there are a lot coming out, right? We have a handful of FOMC members for the dollar speaking throughout the week. You can see as we scroll through, we're going to have on Tuesday CPI for Canada, which I'll talk about in a little bit because this is going to be important. We have an interest rate decision for New Zealand. Wednesday, we have our FOMC minutes. And then Thursday, a flood of news, right? PPI for the euro and the pound and the dollar, right? Now, I want to talk on the CPI for Canada because just like last week, this is a fundamental event that is highly correlated with interest rate decisions because it's correlated with inflation and all that jazz. And well, I do have a podcast coming out on Thursday talking about the carry trade. And in that podcast, we talk a little bit about blending fundamentals and technicals, what to pay attention to, and why one currency is strong and one currency is weak and all that fun stuff. So if you get a chance, make sure you tune in for that one. Again, it's going to be episode 976 on Thursday. But in home run trades, which is the topic of that podcast, there are a few pairs that I frequent when it comes to home run trades. One is the yen. The other is the Canadian dollar because they're, for me at least, they're pretty easy to get a read on. And what's happening with the Canadian dollar is the rumors are that they may be looking to cut their interest rates in their next central bank decision, which is going to be on June 5th, right? Now, when you compare that with other currencies, like let's say the main one, the dollar, if we're going to cut at all this year, right? It was supposed to be like 6 times, and now we keep pushing it back. But if we're even going to cut at all, the first chance is not going to be until September, November. I don't think we're going to cut at all, to be honest with you, maybe December, but the absolute first chance would be September. So we're going to have a situation where Canada is going to be cutting their interest rate, so weakening it, essentially, their currency. The dollar is going to be keeping a high interest rate, so keeping strength in their currency. Now, there are the rumors of cutting it, which will affect it, but just from a general perspective. So from a fundamental perspective, this sets you up in a situation where you should think that we have a stronger dollar and a weaker Canadian dollar, right? So if you're going to find yourself in a bullish opportunity, for example, in the dollar Canada, maybe it's one, if the technicals align, right? One, you never want to get bullish just because of fundamentals, in my opinion, unless you're an investor, right? You need to be involved for a technical reason, and then the fundamentals come second, right? It's the sprinkle on top of the cupcake. That was weird. Don't mind that. Just give my kids breakfast and whatever. Two, if you do find yourself in a bullish position, maybe it's one of those situations where you think about holding longer than usual. Now, overall in the dollar Canada, we've been in consolidation. There's not a lot here that screams like bullish continuation at all, but we have had a lot of advanced pattern formations, and something that we do have setting up is going to be a potential bat pattern. If I get my starting leg right here, and apologize, the dogs are out. If I take this as my starting leg, this is going to be called, I don't know why I put a rocket ship, this is going to be called my X leg right here. This first move up, this is going to be my main move, the starting point of my advanced pattern formation. This is going to be my X to A, and it's called an impulse leg. As I take my Fibonacci retracement from our swing low to swing high to X to A, I want to see where this next retracement comes to. And based on where this next retracement comes to, I know which type of pattern I'm looking for. In this case, we come to the 50%, this yellow, orange one right here, before retracing back up. And I know that leads me to expect a potential bat pattern. And I know if I'm expecting a potential bat pattern, that's going to complete down here at the 886. So if price is able to push down to this zone, we have a bullish bat pattern, which would be a buying opportunity. Normally with pattern formations, we're taking off profits pretty early, and they're literally probably going from where I drew my arrow to about right here for target one. Let me just measure that on and see. I'm doing this too long. I bet I'm dead on. A little bit off right there, right about target one initially right there. But what I was saying is, if you are someone that's taking the fundamentals into account, if you are looking for, quote, a home run trade, then perhaps this is a situation where you still want to take some money off the table, in my opinion. You always want to get that money in your pocket. But the second half of your position, instead of taking it off a little bit higher, maybe you hold for that potential bigger move. Now, over the past month or so, we've mentioned the Euro Canada twice, looking for a break and close above the higher part of resistance above this consolidation level. And what did we say? Well, if we break and close, then we're likely to continue to either spot A or spot B. Well, same situation here, right? The Euro Canada, right? The European dollar, or the Euro versus the Euro versus the Canadian dollar. Now, again, Canadian dollar, if there is going to be an interest rate cut, we would expect a weaker Canadian dollar. Now, the euro, right? They're not necessarily waiting till September. There are rumors that cutting may happen in June as well, literally a day after Canada. They're probably going to wait and see what Canada does first, but same type of situation where we have a technical reason to get long. If you are deeming the euro to be stronger than the Canadian dollar from a fundamental perspective, maybe this is also one that you hold on for a little bit longer as well. Next up is going to be the euro dollar. And if you guys are following the fundamental theme, again, euro may be starting to cut in June. Dollar not cutting at all until September, maybe. Again, my thing is December. So again, from a fundamental perspective, you can start looking at these things from, hey, what is the difference in kind of monetary policy that's happening? Is one going down while the other is staying the same? Is one going down and one going up? And put those together for that fundamental perspective if you want to add that to a part of your trading equation. Now, I am in the euro dollar right now. I'm in a bearish bat pattern, so I'm already short. But we do have another opportunity here. This is an interesting one, right? You can see that on the higher time frame, the daily, we did hold this level of structure. On the lower time frame, the 4 hour, we did break and close. So two different signals there. As we go down to the hourly, right? If you're looking to get short, we have another opportunity that may be setting up. But make sure you check your data because this one is close, literally to the pip. If I take my Fibonacci extension from our swing high to swing low, again, this is going to be my X leg. Nope, wrong tool. Here we go. This is going to be my X leg right here. This is going to be my A leg. This is going to be my B, kind of B. This is going to be my C. And then I'm looking for a D completion up here. What we have, question mark, is a potential cipher. We have an X to A, my first swing high to swing low. We have an A to B, we have a B to C, and then we're looking for a potential CD completion. Now, the thing with the cipher is, and this is a rule that many people don't know, and it's why you see so many messed up ciphers up there, and people complain, oh, it doesn't work. Well, you're not trading it the right way, is that this C leg cannot close below the 1414. And if you look at my data, I literally have it closing to the pip. But that's what I want to say. That's why I tell you guys to check your data. If you break and close below, not a valid C leg. If you stay above, a valid C leg. And then what we're looking for is a move up to our 786 right up here. And this is going to be our D completion for the potential bearish, wrong tool, I'm having a day, guys, for our potential bearish cipher. I personally trade them right at the completion, but you can also look to trade them anywhere within that zone, waiting for an alternative reason for entry or something of that sort. So potential bearish cipher here on the euro dollar. That's going to go hand in hand with the hold of our structure levels right here. And again, if you're playing on that fundamental play of weakening euro, strengthening or not necessarily strengthening dollar, then boom, this puts you in that same direction as well as being bearish this pair. Now we're heading over to the pound Aussie. This is an interesting one because pound Aussie has broken and violated a previous level of structure, a structure low here, and we have just consolidated. We have just gone straight sideways. We have just gone straight low and tight flag pattern. Now, a good trading book that I think every trader should have is, or if you're a pattern trader, is called The Encyclopedia of Patterns, of Chart Patterns by Thomas Bulkowski. I have the second edition. I believe there is a third edition out as well. It is a great book. And understand that this isn't like a traditional trading book that you read from front to back and you learn. No, this is a reference guide. So this is a guide for when you see something on a YouTube video like high and tight flag or a low and tight flag, or you read something somewhere else and you want to know what it is, or you recognize a pattern in the market and you're not sure what it is, you flip to it as a reference guide and it gives you all sorts of information, all sorts of statistics on what you're looking at, probabilities, trends, more than you can ask for. Now, obviously you still want to do the homework yourself. If you plan on trading something, you want to back test it and go through that process, right? You never want to take anyone else's word for it, especially because this book focuses mainly on the stock market, which is completely different than the forex market when it comes to classic chart patterns. But what you'll see in this book is that the low and tight flag or the high and tight flag, pretty much, to sum it up, is one of the best patterns out there, right? It is one of the best continuation patterns out there, and that's what we have right here. We have a violation of structure. We have a tight sideways consolidation. We don't have another level of structure until honestly down here, right? We do have some inside jazz here, but we know, right, foundation course members, right, inside structure is not as important as outside structure, right? This is a good setup for a potential bear breakout to the downside. Again, we can kind of isolate this level a little bit more, and we'll add on to this as we continue to do our work throughout the live sessions and whatnot. We'll just do it all. I'm getting lazy here. Sorry. It's early in the morning. I'm getting ready for the last day of Premier League matches. I'm not sure if we did this last week or not, but you can see the 1618 Fibonacci extension down there. We have a right in the middle of the zone. We have volume down here as well. Yep, our volume spiked right at the level. I feel like we looked at this last week. I forget. Last week in the YouTube video, I don't remember. I know we looked at it during the room, but if I did, it's a repeat. Anyway, very nice pattern. Look for a potential breakout. And then if you guys know my style, there's 3 ways of trading breakouts. There is the before, the during, and the after. So before would be establishing a position somewhere in here prior to the breakout, right? Anticipating that the break is going to happen. The during is, right, sell stop right below here, and as market breaks out, you're hopping on that train and going down. And then the after, which is my personal favorite, is the break, the violation, confirmation of that, and then the pullback, and then look to catch that pullback on the way down. So a nice setup on pound Aussie. Hope you enjoyed the video. Go back through the catalog, lots of trading information here. Go back on the shorts tab, daily trading tips. Check out the Trading Coach podcast on your favorite podcasting app to answer pretty much any question that you've had about trading. And until next time, plan your trade your plan. I wish you guys a great week of trading. I'm in like a million trades right now, so I'm hoping the weekend opens well for me. But regardless, wishing you a great week. And until next time, plan your trade your plan. Take care.